All right, we're officially live, Mark. How are you doing?
I'm doing good. Happy to chat.
Yes, we're excited. I had a lot of questions in my community feed for you, so you better crack your knuckles and make sure you have your degree posted behind you because we are just going to put you through the test with lots and lots of questions, but good questions, questions that really every reseller needs to know. Okay, first off, why don't you introduce yourself? Tell us why we should listen to you in the first place, your background, and really why you wanted to choose to help resellers in particular.
Yeah, I mean, no, you don't have to listen to me, but I think it would help. You don't have to, but I mean, so I'm a CPA and I've worked with resellers. I mean, pretty much exclusively for the past 4 or 5 years. But I mean, I'm a CPA and I've worked with resellers. I mean, pretty much exclusively for the
Sorry, was that repeating? Sorry,
yeah.
go ahead.
Sorry, startled me hearing myself. But
Sorry, that was totally my bad.
Yeah, no problem. So I'm a CPA, work with e-commerce, specialize in e-commerce, and I do some Amazon on the side myself. So that's it in a nutshell. Yeah, I'm finally been moving around geographically for a while, but finally settled in Utah.
Awesome. You say it so casually. You do Amazon amazingly well. You do private label. And I want to say you had your first six-figure year last year. Was that right?
Yeah.
Yeah, crazy. So Mark is being humble about it, but he's killing it in all aspects. That's super cool. And you're more than qualified. You know, some people I think we casually throw around tax advice every now and then, and we hear advice, but you are more than qualified to actually give us real answers for our questions. So if you're cool with it, I'm just going to jump in and start with some questions for you.
Bring it.
The top question that had the most thumbs up was, I want to know is, if eBay takes out taxes, do we have to pay state sales tax?
Yeah, I think the short answer is no. So
Okay.
in most states now, there are laws that require eBay and the other big platforms to take care of the taxes for you, to collect and remit those taxes for you. So there's really nothing you need to do. Yeah, and if you are already registered for sales tax, like if you have a sales tax permit, they still want you to file your sales tax return, but you're not going to owe anything on it. It's going to be zero, basically.
Okay. And for those who have signed up for managed payments, I know for me, when I pull a report, it shows me what sales tax has been paid for me by eBay, basically taken out of the sale. So that is really handy. And yeah, now that eBay, I think, Mark, do you know, do they cover every state now?
No, there's still a few stragglers. The most notable one is Florida dragging their feet.
Florida, that problem child. Okay, this is good to know. Thank you. All right, next question. I'm finally taking the jump into reselling this year after months of watching YouTube videos to prepare. What can I do now from the beginning to set myself up to make tax time easy next year?
Yeah, I think the one of the biggest or most significant things you can do in the beginning is just to make sure that you're separating your business activity from your personal activity. Is open up a separate bank account and link that to eBay or Poshmark or whatever you sell on. Link that, link that to your credit card that you use just for the business. And that's just going to make your life a lot easier when it comes to tax time, or if you dive in and try and start keeping your own records and so you can see your own profitability. That's probably the number one thing I would say starting out.
Absolutely. It just is a nightmare to go back through every transaction and figure out which Walmart trip was for retail arbitrage for Amazon, which one was for groceries. Like, it's just almost impossible. So that is so helpful. Yes, from the beginning, get a business bank account. We did. It's just only use that for business transactions. And then I also have, just for those watching, I have a personal account where that's where I move money over to give myself an owner's draw, pay myself for things that I need done around the house or like the basement, stuff like that. And that's how we keep things separate. And I think I would also suggest, just while people are at it, if they have their business bank account ready, start classifying those transactions if you can, right? Like which ones are inventory purchases, which ones are owner's draws, which ones, etc. That just also helps come tax time. That's what our CPA wants to see as well. So just being organized, keeping everything as organized as you can. And for those of you that, if we're not going to get to everyone's question today, Mark has a tax guide that is fully comprehensive, everything you'd need to know, especially for resellers, just for our niche, and it's in the description below. So check that out. And the discount is only for today and tomorrow. The biggest discount you get is today, tomorrow only. There's a slight discount for the next few days, but maximize it today. So just throwing that out there, of course. All right. Let's see, what are the rules to writing off a room or rooms in your house that are specifically only for your business? What is deductible for expenses by working out of your home?
Yeah, I mean, the biggest one is the home office deduction. And yeah, so the main rule there is you have to use a space regularly and exclusively for your business. So like, you can't work off your kitchen table and eat your meals there. So that would disqualify the home office deduction for that area. But if you have a room or even like a corner of room that you use just for the business, then you can use that square footage and incorporate that into the home office deduction. Yeah, there's something else I was going to say about that. Oh, a lot of people are like, well, I don't want to take the home office deduction because I heard it's an audit flag. I'll get flagged for an audit. But that, I mean, the home office deduction is so widespread now, and there's a lot more clarifying guidance about it than there was 30 years ago. I mean, some people say it's never been an audit flag, but if it was, it's been decades since that's been the case. So if you qualify for it, you should take it. Like, don't not take a deduction because you think the IRS might see it or something.
Absolutely. Can you expand on, like, I recently asked our CPA, we just finished our basement, and I'm like, hey, if I film down there, can I write off some of those expenses or whatever? Because there's a super funny video on YouTube by Gus Johnson where he talks about tax write-offs, and he's holding toys that he bought. This is a tax write-off. This is I bought this just to film, just to write it off. So my CPA mentioned something about I can rent that space from myself at a reasonable cost, the reasonable rate, for the amount of time that I use it to film. Can you kind of expand on any of that, like how that works? Or are we getting into weeds?
I mean, yeah, people definitely do that. I think that gets into like more of an aggressive tax position. And then, so if you do rent a space from yourself, you're sort of just transferring self-employment income to rental income, because then you have to report, you take a deduction for it from the business, but then you have to report it as income, like rental income.
Right.
But then you're not subject to self-employment tax. But I don't know. I should probably research that one a little more before we get into that.
Oh no, that's okay. It's an obscure little branch, and it sounds like it's almost just, when she explained it like that, I was like, well, if I use it for 15 minutes for one video once a year, what is that?
Yeah.
$20. The Family Flips in the comments is actually asking, if I use the garage solely for reselling, but it's not included in the square footage of the house, can you claim that as a space?
Yeah. I typically incorporate the garage into the overall square footage of the home.
Okay. Awesome. Excellent. Yeah, I think, speaking of audit red flags, I think it would be a red flag if you wrote off your entire mortgage, right? Like all the time. Wouldn't that be? I had a friend who did that, and I was like, that's a little.
Yeah.
No.
Yeah. No, you can only do your mortgage interest and only the percent of that, that your office accounts for. So if your office is 10% of your home, you could take 10% of your mortgage interest and your property taxes and that sort of thing.
Okay. Yeah, gets a little tricky, but it sounds like, yeah, you explained it really well. Whatever your space you're in that you're using, if as long as it's dedicated just to that, that's the safest place to be. Okay. This is a good question for you. Do you need to include any amount you've profited or only over $10,000?
10,000.
It's over 10,000, right?
Yeah.
I've been doing this wrong if that's the case.
Yeah. Yeah. No, typically you should report any of your profit, typically the first dollar of your profit. I'm not sure where the 10,000 comes from, but usually if you don't exceed 20,000, or if you do exceed 20,000 in sales, then you'll get a 1099. So that's usually when what people say. They're like, oh, I don't have to report if I don't get a 1099, but it's still reportable. It's just that the IRS might not know about it. And you're not going to get a 1099, but it's all still technically taxable.
Yeah, best to stay above board. Right? Like, we don't want to mess around with the government. We just probably want to be as above board as possible. Someone is very shocked that you are not my CPA. Just to clarify, I met my current CPA before I met and knew about Mark. So that's really the only reason she's continued to be our CPA. We love her, but Mark would be awesome too. If she ever left state, Mark, I'm calling you up. You officially can house all of our taxes, and it gets really sticky and messy because of my husband's income, our investments, oh gosh, it's fun.
I might turn you down anyway.
Yeah, he would take it on. Are you still taking on tax clients, by the way? For anyone here that's like, I need someone trustworthy.
Yeah. Yep. Okay. Still growing. Shoot me an email.
Perfect. And I think you could tell, as a side tangent, you can probably tell us better than anyone obviously in a general sense, gross sales numbers are definitely not what people take home with their reselling business. It's fun to talk about gross sales numbers, but they are not what you are taking home. Okay. I want to find out if I can use my personal inventory for resale, and if I can use that as cost of goods. And also, where in our taxes do we put it, and if we can count that as an inventory expense. So like, if you're just pulling things out of your closet and selling them on eBay, how does that work?
Yeah, so it basically becomes business inventory. So then you have to figure out, okay, well, what's the deduction that I get for it? So I typically tell people just to go with the original cost. But then the problem is, okay, they probably don't remember what they paid for it. So the rule is you're supposed to use the lower of your cost or the market value. But I usually don't go, unless the item is just trashed, I don't go with the market value because it's just so hard to determine. The range of prices out there for that item could be so wide. So then I just say, well, just try and remember what you paid for it and just use that as the cost that you deduct. Okay.
So it's not like a zero expense item. You would technically go back and think, okay, I paid $40 for it. It sold for $50 or whatever. Mm-hmm. Okay. That's the best way to stay perfectly. What if someone just donates to you their stuff? Would you still use market value?
No, in that case, since it was never any cost to you, in that case, you probably would just say it's zero cost.
Okay. Gotcha. Oh, that's really good to know for sure. How do we pay the least possible taxes? That's a great question. I want to know. What can we deduct? What items or expenses should we keep track of? LLC or another entity before I'm just fire hosing information at you. I know for us, we recently moved from an LLC to an S Corp, and that's organized a little differently, and that saved us money. But I want to say the threshold was around, what is it, like $30,000 take home? You're going to want to, we did this a couple years ago, but at around $30,000 take home, like net profit, you might want to move to an S Corp, but I'll let Mark be the final say on that.
Yeah, that's right. It'll vary. It could be 30, 40, 50,000, but yeah. So, because with an S Corp, once you get up into that level, so with an S Corp, you're not subject to self-employment tax. And the self-employment tax is 15% basically of your profits. that you pay when you're a sole proprietor, when you're an LLC. But if you're an S corp, you don't have that 15% self-employment tax. So you just want to make sure that you're generating enough profit so that the tax savings are going to more than offset the additional costs of operating as an S corp, which include like an extra tax return, paying for like a payroll service because you have to pay yourself a salary. Those are the main things. But yeah, that can be a good move. That can save people, $18,000 their first year.
Absolutely. It saved us, I want to say it saved us $8,000 the first year that we moved over. And we do now pay for payroll, and she keeps track of our payroll, and I'm paid, she's not just saying, oh, your salary is $10 a month, and that's all your tax, all your taxed on. I am paid a reasonable salary, and that's how she does it moving forward. But, because I know that's like a little loophole some people think they can get away with. Well, if my salary is a penny a year, no, it has to be reasonable, or else I'm guessing, Mark, that would be a big audit flag, right? If you have all kinds of money coming in, but your salary is really low.
Yeah.
So,
I mean, they can do what are called reasonable compensation audits, where they come in and they're like, you're paying yourself way too low. And they'll actually adjust it upward, and they'll charge you the taxes that you would have paid had you been paying yourself that salary, plus probably some penalties and interest. But
yeah.
Some people risk it.
They are braver souls than I. Yeah, we do a very, very reasonable salary. And even if you are taking a salary, that's not all you can get paid. You can take another owner's draw at any time. At least that's what, we were told, and just mark it as an owner's draw, but you're technically being paid that salary, and that's where those taxes are coming from. So I think, I don't know if that was one answer to the question is, figure out what threshold you're at to have the most savings. I would say if you're a small reselling business, and you're still just starting, an LLC is great. But as you start to pull in more profits, you might want to think about sole proprietorship. And you can cover that in your guide, right, Mark? All that stuff.
Yeah. You might want to think about an S corp. You said sole proprietorship.
Oh, I'm sorry. S corp. That's right. Sole proprietorship and LLC are pretty much the same thing. Okay. So what can someone deduct for their taxes?
Yeah, I mean, pretty much anything that you are purchasing in the course of your business that has a business purpose. I mean, it's going to be deductible, or at least partially deductible. Like all your inventory, your supplies, your like software subscriptions, your tools. If you buy like, I don't know, repricers or like printers, all that stuff, it's going to be deductible.
Right.
There are just a few of those deductions are kind of tricky, like meals, for example. They're generally they're only 50% deductible, the ones that qualify. But I should clarify on that. So with the relief bill that just recently passed, they actually made meals 100% deductible for this year and next year.
Okay, gotcha. So meals aren't always just hey, let's an anniversary dinner at a fancy restaurant. Let's bring up business once and write it all off. No, it doesn't really work.
Yeah, well, and again, I should clarify that too, because most meals probably won't be deductible at all. So they have to be either part of business meeting, or they have to be part of travel, typically like outside your city where you're staying overnight somewhere. But yeah, I mean, inventory, cost of goods sold, that's a big deduction. Home office deduction, mileage is a big one. Somebody I just talked to, like just before hopping on this call, they thought they had about 28,000 miles they have driven last year.
Wow.
That's a lot of miles. And they were asking, like they hadn't tracked them, and they were like, what do I do? But I mean, that's so you got 57.5 cents per mile last year. So, I mean, that's a huge deduction on their taxes.
That's enormous. Is there a cap on the amount of mileage you can claim to deduct?
I don't believe that there is.
That's awesome. So yeah, guys, especially if you have a van and you are just cruising around the country getting those bolos, you have to track every mile, because that is huge. That's a huge amount. 28,000 miles is crazy. That's a lot. And I know I track every time I'm going out to garage sales because I'm going all over the valley and I'm tracking all those miles because every single one counts. And yeah, it's good to know that there is no cap. So just, yeah, as long as it sounds reasonable, I would say if you're driving 200,000 miles a year, maybe the, IRS might not buy it. Okay. I saw an interesting question here. Patty asked about paying your kids up to $12,000 a year. What can you tell us about that? I've seen that floating around TikTok and everywhere. So you can pay your kids under 18, this is what they say, up to $12,000 and write it off.
Mm-hmm. Yeah. So here's the thing, like technically, if you pay your kids without doing anything else, well, yeah. So like normally if somebody were to pay, if you receive self-employment income, you would be subject to self-employment taxes. And the standard deduction, which is $12,000, that won't wipe out your self-employment tax. But the thing is, when you pay your kids or when you employ your kids and pay them, they're not subject to payroll taxes, which is essentially your self-employment tax. So whatever you pay them is only subject to income tax. But if you pay them less than $12,000, which is the standard deduction, it'll just basically wipe out anything that you paid them and make it so that they don't even have to file taxes.
Gotcha. Okay. So is that a tactic you would consider using?
Yeah, definitely.
Awesome. Okay. So hopefully that made sense to you guys. Cause yeah, it sounds like a huge opportunity. If I would say, like, if I can just throw in, we had a family business growing up from when I was young. And I felt very forced into it. And it was claimed that I made money. I did not actually take home any money. And it's a very sore spot. So I would say, be careful with your kids. Make sure that there's something they want to do. It can turn into some family drama real quick if it's not all above board and all straightforward and with everyone's consent. That's just what I'd.
That's a good point, because I talked to my brother-in-law about this stuff, and yeah, you don't really consider the emotional side of things. You're just like, oh yeah, I'll pay my kids and then I'll make them pay for their own clothes. I'll make them chip into the family vacations,
Yeah.
So
yeah, it's great in theory, and it's something I want to do with my kids, but fully with their consent and with the knowledge for them that this is just us preparing you for how the world is going to be, but never out of like, you owe us or you have to do this. That's where it started to get really twisty and complicated and not so great. So I just would throw that in there.
good point.
Okay. Awesome. That's really good to know. My son's only 8. My oldest is 8. So I'm probably going to wait a little bit before do you know if there's like a limit to how young, like, is there an age bracket of how old and how young they need to be?
Yeah, like the child labor laws and stuff. I feel like there are exceptions for your family, but I'm not an expert on that. But I also feel like the IRS doesn't really care. Even though your local, like, whatever agency might, I don't think the IRS necessarily does.
Gotcha. Okay. Child labor laws are ruining this country. Just kidding. That's a Ron Swanson quote, not me. Okay. Let's see. Another question. Okay. Do I need to report only the inventory I purchased that sold in 2020, or do I include all my inventory costs for the year, whether it sold or not?
You got to repeat that. I was reading a funny comment.
Oh, you're good. You're good. Okay. Do I need to report only the inventory I purchased that sold in 2020, or do I need to include all my inventory costs for the year, whether it sold or not?
Yeah, so this one is confusing because the laws have changed over the past few years. Like historically, even if you were using the cash method for everything in your business, you could do that for everything except for inventory. And that just means that you recognize income when you receive it, and you recognize an expense when you spend money. Whatever happens with the cash, that's when you recognize those things. With everything except for inventory. So historically, the requirement was to not deduct your inventory until it's sold. That's called the accrual method for inventory. But they loosened up the laws a little bit in 2018. So now you have the option to deduct your inventory right when you purchase it, which simplifies things a little bit if you want to go that route. So you really just have to, and that's called the cash method for inventory. But you really just have to pick one of those methods and then just kind of stick with it.
Gotcha. We've been doing not the cash method. We've just been we just give our accountant all of my cost of goods sold for the year and then all of my cost of goods unsold. And then there it is on our main tab of our spreadsheet, and she does with it whatever she does. But we have not deducted as soon as we've bought it. I guess technically that means in December, could you make a giant purchase, a $50,000 liquidation purchase, and call it good? And would your tax burden be very low for that year?
Yeah, I mean, that's one potential advantage of the cash method that you would not have with the accrual method. You could just go make a big purchase, lower your taxes. Although, that's just going to increase your profit the next year.
Exactly.
So in the absence of anything else going on over the course of that 2 years, it's not really going to help you. But sometimes, with like the health insurance exchange or something, people are like, oh, I got to get below the $150,000, I'm going to have to pay back all my healthcare subsidies, stuff like that. So in that case, that's a way you could get down below that threshold. So if there are other things going on, you can kind of play with that a little.
Absolutely. No, I understand that. And gosh, I guess if you did have an instance like that, it'd be good to utilize some kind of inventory purchase late in the year and help bring that taxable income down. No, that's a good answer. It is a little confusing, but yeah, what we've been doing is just the accrual. Sorry, is that right? The accrual method?
Mm-hmm.
Okay. Where, as it sells, we deduct it, not as we buy it.
Yep.
Because it all, like you said, the next year, even if we did deduct it, the next year we'd have more profits and have to pay more anyway. So robbing Peter to pay Paul a little bit.
Mm-hmm.
Okay. Let's see. Okay. I'm curious about what tax rates to use if I generate income through eBay business, but I also earn money as an employee for a company. I'm self-employed in the sense that I run my own business. I have an FEIN and everything, but I'm also employed at the same time, so it's confusing.
Yeah, I mean, if you're a sole proprietor or a single member LLC, all of your business or reselling activity, it'll just go on a different schedule of your same individual tax return. So you'll get a W-2 for your day job, and then for the reselling stuff, you'll just have to include that business activity on that separate schedule in your taxes, and it'll all kind of go to into the same pot eventually.
Right. Okay. So really you have your W-2. That's just one piece of the puzzle when it comes to your taxes, because then you can almost, with my husband and I, he works for a company, I do reselling. His is so straightforward. He just gets the W-2, has his income done. Mine is just a mess, and not really, but it's just a lot of numbers and a lot of working through, deductions and ending bank account at balance, beginning bank account balance. And we have all that information. We have everything tracked. I think it's just number one is to stay as organized as you can and make sure that you're keeping your business expenses separate and you're classifying what those business expenses are, whether it's in something like QuickBooks or a spreadsheet for yourself, QuickBooks Self-Employed, and just keep track of all of that stuff. And you should be good to go. It's just, the more detailed and more nerdy with numbers you can be, the better, and the more your reselling journey will thrive. I really, truly believe that. The first couple of years I was doing that. Well, really the first year I did this, I was so excited about all my gross sales that when it came time to actually report what I actually made, I was pretty shocked that it was not quite what I thought it would be. And only when I became very detailed with all of my, sales and numbers and cost of goods and got really specific about it, I saw exponential growth with my business. And every year since has been more profitable than the last. So again, I really just cannot recommend enough keeping track of all of these things It's worth the, I don't know, 20 minutes a week. It's not that much, 20 minutes to 30 minutes a week. And you can stay completely up to date with all of your numbers, everything that you need to know. And then by the end of the year, which is what we did, we just had everything ready and we met with our accountant in December, finalized a couple numbers in January, and it's done. So I cannot even tell you like the burden it releases from you to have everything so simple when it was such a nightmare before. Sorry. So just a quick tangent and plug, please get organized. Mark's guide will help you. Okay. Another cost of goods question. Yeah. I think we covered that pretty thoroughly with accrual method versus cash method. It's up to you guys. Do you want to deduct right away? Do you want to deduct just when it sells? I mean, Mark, do you even have like a preference for either? Like, would you say that one is better than the other, or would you say just whatever you decide?
I think it depends on your business. Like, cause I'll talk to people and they're like, I'm retired. I just do this to pass the time. I like selling stuff online. I'm not trying to grow it. And for them, I recommend the cash method. It's simple. They're not going to have to track as much. So if you value simplicity, I might consider the cash method. So with the accrual method, like if you're growing, if you want to be like a little, maybe more serious, maybe, I don't know, but it does a better job of matching the deduction, the inventory deduction with the sale that it belongs to. So it sort of makes your month-to-month profit and loss look a little bit more accurate, I guess.
Right.
Sort of like you can tell more easier what's going on with your profitability. 100%. Because if you go buy $10,000 of inventory, you might show a big loss in December, and then in January, like a big profit, and you're like, it makes it noisy a little bit. But yeah, either one, it just depends.
Absolutely. And I really prefer, I think in the end, we preferred the accrual method for that reason. Our numbers month to month give us a much better picture of like what is actually happening with my business. Like, am I growing? Am I selling more? What's my profitability this last month? Versus like you said, with the cash method, if I make 3 huge inventory purchases, it's not giving me an accurate picture. So that's a really good thing that you pointed out. And I think we'll just share. This is why I prefer the accrual method, but again, do what works for you based on how your year looked. Okay. Someone asked in the comments here about buying a vehicle to write it off. Any thoughts on that? Buying a vehicle like a truck or a van to help you maybe transport inventory. How does that work?
Yeah.
Can I buy a Tesla? Asking for a friend? I don't know.
Yeah. That one just depends. It depends on how much you're going to use it for business versus personal reasons. I mean, most people, they're going to use it a lot for personal reasons as well. And if that's the case, I would probably just deduct the mileage or deduct even the actual expenses to the extent that you use it for business. I mean, if you buy it under the business name, it could I don't know, you might have to pay more because you're a business. So you might have to get like a business insurance policy. If you use it for personal purposes, in some cases, like you actually have to include that as income on your personal return. So it's a little bit more complicated. So I would just buy it personally as an individual. And then for any business use, just deduct those business miles. That's the simple way to do it.
Gotcha. That makes total sense. Because if you're using it to transport inventory to go around, you're already accumulating a ton of miles anyway. You might as well just use that deduction. That makes total sense. Because it would be hard to only use it for business purposes. How do you even do that? Okay. Can you deduct utilities like water or power?
Yeah. Yeah. So those are usually deducted as part of the home office deduction.
Is it included in the home office deduction, just not by its nature?
Utilities, yeah.
Okay.
But, if let's say your office is 10% of your home, so normally you would take, 10% of your rent or mortgage interest, 10% of your utilities. But let's say that you you do a lot of sourcing from thrift stores and you are running the washing machine like all day, washing that stuff. So you're like, well, I'm pretty sure like 80% of my water bill actually is for the business. In that case, you can actually, it doesn't have to be the 10%. You can actually break out that 80% separately and deduct it.
Gotcha. Okay. Kind of like a phone. Can you deduct like your phone bill in the same vein? Like you're using your phone all the time for reselling, eBay comps, whatever. Would you just again do a percentage of how much you think you're using your phone for your business?
Yeah, exactly. I
Okay.
think that those are another ones like your cell phone and your internet. Those are sort of outside the home office deductions. So you just kind of calculate those separately.
Okay, gotcha. Awesome. Okay. Mark, Amber wants to know, hi Amber, if she has most of her taxes done and just wants to ask you a few questions, what's your hourly rate?
No, she
Gosh,
says,
ask them now.
do you have an hourly rate?
Oh, yes. Do you?
I can't say what it is because then I can never raise it.
Clever.
I'm just kidding.
Amber, go ahead and ask now. Ask now.
No, yeah, I do offer consultations, like paid consultations. It's pretty tight during tax season, but in general, yeah.
Okay.
Shoot me an email.
Awesome. Awesome. Okay. Let's see. I didn't keep a record at the beginning of 2020 with some of my items sold and if they were donations or if I got them from the thrift store. I did keep all of my receipts, but I'm totally lost on what I bought and what I got as donations. This is probably a good time to talk about receipts and the mythology behind receipt keeping. We're about to do some myth busting. So, what would you say to this person who didn't really keep a record at the beginning of 2020 with their donations versus which were donations and which they got from the thrift store?
Yeah, that's a good question. I mean, if they just don't know individually, that might be okay. Maybe they know in total, and then you could use that total, maybe.
Yeah, right?
Yeah, I don't know. Like worst case scenario, you can I don't know. I just like, what do I want to say that's going to be recorded forever? Yeah, like I mean, I tell people worst case scenario, make some educated estimates. Like if you have nothing to go off of, but usually there's I guess, I mean, you might have a bank record, you might have a credit card record, but if it was truly cash and you don't have receipts, then yeah, I would still claim something on your taxes, some deduction that you think is reasonable. But if you ever did get audited, you could create your own record and see if that suffices, but you just have to be ready for them to say, sorry, we're going to just, I mean, they won't throw you in jail. They'll just say, sorry, you can't use that deduction this time.
Right. Like,
doesn't mean you shouldn't try though.
yeah, exactly. And you're really, I mean, it's not as scary, I don't think, from what I've heard, to be audited as it sounds like sometimes. Like it's more they just come in and they're going to ask for more evidence, and if they don't see it, you're going to owe a little bit more, right? With some penalties.
Usually, yeah.
Chances of going to jail are probably quite slim.
Yeah.
And then receipts. Do we need to keep every single receipt? What if I go to garage sales and I'm buying a bunch of stuff, and I don't have receipts from these people? Do I make them sign a piece of paper? What do we do?
Yeah, I mean, I don't think you need to keep receipts, really. Like, I don't think it's a big deal. Like, technically, you should have some type of substantiation for each transaction. And usually that's the most obvious solution to that is to keep a receipt. But on the other hand, like the IRS or whoever is never going to come after you because you don't have like the $5 receipt for for the skirt you bought or whatever. So yeah, if you get one, then I would just scan it and store it and forget about it. If you don't get one, if you're concerned about it, like I would keep some kind of logbook or spreadsheet where you just sort of make your own record. Because if you don't get anything, I mean, it's not your fault. All you can do is make your own record, and then that'll be fine.
Exactly. Like and I've explained this to Mark, we've talked about this in past chats about, like, if I get home from a garage sale and I have my tracking spreadsheet ready to go where I put in date of purchase and where I went, what I purchased. It could be savers. I bought 25 items and the total came out to $100. So that's $4 per item. Or I went to garage sales, I spent $400 and I got 100 items, again, $4 per item on average. And that's just how, and again, if I keep the date and the transaction matches with the bank transaction for pulling out that money, and same with an ATM transaction to pull out the cash for going to these yard sales, from what I understand, that's plenty of evidence for my business transactions, right?
Yeah, I mean, all they're trying to see, or all they would want to see is like, did this really happen? Is it legitimate? And if you've got listings up, if you have a sales report where all this stuff is listed, they're not going to be like, I don't know. It's pretty obvious that it's a legitimate deduction.
Right. So yeah, just best to stay as above board as possible though. And that just helps me as well. When I get home, I know my cost of goods because I know how many items I bought, and I do an average, on average, I bought 25 items, and they may vary in cost, but I just average it out. And that seems to work okay for me. And I know my numbers pretty well. And I want to say across the board, I spend on average $4 to $5 per item, just historically. Okay. Do you have any recommendations for tracking numbers like this, Mark? Do you use GoDaddy, there's GoDaddy Bookkeeping. There is QuickBooks Self-Employed. What do you recommend?
Yeah, I mean, I'm still waiting for the perfect solution.
Yeah, we haven't ever found one. That's kind of why we just use a spreadsheet. And Mark has a spreadsheet. You have a free spreadsheet download, right? For tracking inventory and all of that.
Yeah, mine is really to help you track your inventory.
Yeah.
If you need to track your inventory. But then a lot of people have been like, how do I track my expenses? How do I see my full profit and loss? So I did add like an expense tab, but yeah, it's mainly for inventory. Because did you release yours yet?
No, I keep telling my audience it's coming, but ours is, it's a full profit and loss spreadsheet that my husband, who is the most detail oriented. Well, I don't know. You and my husband could have a competition for being detail oriented, probably. He created it for my business, and so I've been trying to adapt it to make it available to my audience. It's coming one day.
Well, because somebody just asked me, like, is there a spreadsheet I can download where I can track all this stuff? And I was like, I think Ashley has one now, but I didn't know if you had.
I have the template up in my computer actually, and I'm still working on it just to make sure it makes sense. But yeah, it's just an overview of everything you're going to pull. It's what we give to our CPA, everything that you need to pull out, a way to track it. Mark, your guide though gives you the why and what you need to deduct. It gives you everything beyond it. I would see this spreadsheet as a companion for if you know your taxes pretty well, you need this companion to like just help you keep track of it if you don't want to keep QuickBooks or whatever.
Yeah. If you want me to beta test it, just let me know.
I will actually. I will have you do that. That would be great. But yeah, it can be really, it's just, I would say just as a very, high level, just track everything that you're spending and everything you've made and what it cost you, how much it sold for, fees. We track all of that, and then anything that's a deduction, like that Mark covered, the mileage and the home office deduction, possible utility deduction, all of that. So
yeah, and let me just answer that one a little more. I mean, so a spreadsheet is good. Like if you're comfortable with spreadsheets, like I love spreadsheets, and if that works for your business, I think that's great. If you want to do something slightly more automated, you could start with like a simple bookkeeping program, like either GoDaddy Bookkeeping or QuickBooks Self-Employed are two fairly simple programs. But they do have limitations, especially if you're using the accrual method for inventory. And kind of the next step would be like a more robust system like QuickBooks Online or Wave Accounting is a free one that I think does pretty much the same thing. But yeah, it just kind of depends on your comfort level, on how many platforms you're selling on, that kind of thing. So, they all have free trials and stuff, so it helps to kind of go play with them.
No, absolutely. And yeah, you can just get the free trial and see. There's pros and cons to each one. And again, that's why we love spreadsheets, because we're big nerds and you can really itemize everything exactly as you want. I think we ran into an issue with QuickBooks Self-Employed where we could not categorize things the way we wanted to. They were just a set default like all these, we kept putting things in the other category because it wouldn't let us define it a little further down. And It is broad for a lot of small businesses, and reselling is so unique. So, just, I would say, yeah, try a few out. What I would say, trying any of them is better than not doing anything. So better to try and decide to try a spreadsheet than not to do anything.
Yep.
Okay. What do you do if a bunch of your inventory, like let's say I spent $400 on mystery bags. This may or may not be a true story, and they're all disgusting and awful. Can I just throw it away, deduct it for a loss? What do I do?
Yeah. Yep. You would just deduct it as cost of goods sold.
Wouldn't it be better, like, ideally, let's say you pick something up that's damaged, and instead of throwing it away, though, you just sell it at cost and you make a few dollars back. I would assume that is superior to just throwing it away, or redonating or repurposing it in some way.
Yeah.
What would you say about that?
Yeah, financially, that's more beneficial than just throwing it away. And because you either take a $400 deduction and that's a loss of $400, or you sell it for $10 and then it's a loss of $390.
Right.
So you got $10 in your pocket.
It's always better to just do something, even if it's not as much as you were hoping. Sell it for something and move on. Because otherwise that is a full $400 loss on your business. What is the typical timeline to hear from the IRS if they have issues with your filing? I got a follow-up question from the IRS once, and it was 2 years after initially filing.
I was going to say it could be 2, 3 years.
Good times. Have you noticed the IRS being behind? That's what our accountant has said. They're really behind right now with a lot of things, and it's not uncommon to be delayed on lots of things you're asking or questions you might ask or filings and all of that.
Yeah, I've gotten a more emails than I ever have saying, hey, the IRS sent me this letter about paying my taxes for last year, but I paid them in August or whatever, because the IRS I heard it keeps going up. Like I heard they were sitting on like 1 million pieces and then 2 million pieces of unopened mail. So they're pretty behind.
Oh gosh. Oh, so lovely. Yeah, I got one of those letters too saying I owed. I was like, we just paid this giant amount.
Yeah.
So let's go ahead and But yeah, like you said, they're just really behind. And 2 million unopened letters, that's staggering and scary. I wanted to ask you too, do you ever do taxes for like Poshmark sellers, and what is their reporting system like? Like I know on eBay you just pull reports, Amazon you can easily pull reports, but on Poshmark it's not that simple. Can you kind of give us any insights into how that looks? And Mercari as well?
Yeah, Poshmark does. They have a sales report now that you can download.
Oh, they do? Okay.
Yeah. At least you can download it into a spreadsheet, and it'll have the total gross sales at the bottom, the total net sales, and then the difference. I just take the difference, which would be the Poshmark fee. Mercari, I don't. I remember hearing they didn't have any reporting. They might now, but I'm not totally sure on that one.
Okay, so that's a case where if you're selling a lot on Mercari, you need to just keep detailed records yourself of what's selling, right, and what's not, and that's where you go in as you're shipping things. And this is what I did all last year before eBay Managed Payments made this a little bit easier with their reporting. But I'd just go in and I'd put in everything that sold and what it cost and what the shipping was and the fees.
So I do bookkeeping for a guy, and he sells or sold on Mercari, and I'm just looking at what he sends me, and he does send me a report. So they must, I believe
Okay,
they do have a sales report now, similar
good.
to Poshmark.
That's great. Okay, perfect. Because yeah, otherwise, I think I remember in years past for Poshmark, you had to email somebody or email
Right.
customer service,
Yeah.
and they would send it to you, and it's like,
Yep.
it'd be nicer if you could just pull it out.
They're growing.
They're growing. Yes, they went public. So, um, all right. I had an investing question. Let's say like we see a lot of single stock investing these days. We don't do a lot of it, but let's say you're single stock investing along with your reselling and you're always selling, buying, selling, buying. Can you just, as long as you're putting all that money back into the market, is it tax free or what do you do?
Yeah, that's a good question. No, so every time you sell, you're going to generate probably a short-term capital gain. Unless you've held the stocks for longer than a year, it'll be long-term.
Okay.
Yeah, every time you sell, you're going to trigger something, either a loss or a gain that is taxable.
What is the short-term capital gain rate, right? Is it 15%? What is it right now?
You're putting me on the spot.
Oh, I'm sorry.
I'm just kidding.
I veered off track. This
I
is not
want to say
related.
20. I don't know. I don't. I mean, I don't know. That's a
30%?
scheduled.
It could be 30. My husband was talking about this with me. Something, yeah. But you do pay, you're paying something. You're every time you're selling short term, you are triggering you've made money,
Oh,
you're triggering that tax. Is that right?
yeah. So yeah. So I think the long-term capital gain, that's the beneficial bracket where it's like capped at 20%. But if it's a short-term gain, I think it just goes at whatever your tax bracket, whatever your normal income tax bracket is.
Okay, okay, okay.
It's like
Gotcha.
ordinary income.
Okay. Yeah, we do a lot of we just invest in Vanguard. We just put money away every month. We don't do a lot of the single stock stuff. I do know though that if you at the end of the year, like if I were to put, my husband has a Roth IRA, and we put money into that, but it's a deduction for me if I were to take money out of from my business and put that into my Roth IRA. Is that correct, Mark? And there's like a cap on it, right? Like if there's a certain amount I can put in, can you kind of go over that?
Um, well, a Roth is after tax,
Right.
but you could, I mean, if you put it into a traditional IRA or like a SEP IRA or a solo
Oh,
401k, those would all be deductions for the business.
but a Roth, it would not be a deduction because
Yep.
that's post. Okay. That's post.
Right.
Okay.
Exactly.
Yeah. Okay. That's why we didn't. Because yeah, we only do Roth, so that would not be a deduction for my business.
Right. But that is one big benefit that you have from owning a business. Like if you're doing well and you want to reduce your taxes in that year, you know with a SEP IRA or a solo 401k, you have the opportunity to put away a pretty big chunk of money, like more than you could in a 401k through an employer.
Yes. Okay. And then that reduces your taxable income. So it's an option for sure. Um, and yeah, definitely something to consider at the end of the year. And it never hurts to put money away, especially as you're becoming your own employer. You need to put money away into investments and protect your future. Again, with at what point do you start claiming income from selling on eBay? And you kind of made it clear it's from your first dollar, right?
Usually. Yeah.
Yeah. So the moment you're making money, you gotta report it. Oh, thank you, Amber. Roth IRA limit is 6K. Oh, that's good to know. Yeah, like we max all of that out. But again, we are a joint and it's different for us. And we only, yeah, like if you only pay on your investments when you take them out. Is that right? Like as your investments grow, are you paying taxes on that growth?
Nope.
No.
Typically not until you cash out.
Okay. Joey, I believe that promoted listings fees are all counted as fees for eBay, right, Mark? Like if I pay to have my listings promoted, that's just lumped into the fees, my monthly seller fees from eBay. So yes, that is a deduction.
Absolutely.
Okay, I think we covered all the questions that I had that were posted earlier. Maybe just the last question or two before we let Mark go and just squeeze every just drop of value we can out of him mercilessly. Again, if your question was not answered, it's very hard to just comprehensively discuss this in a 1-hour YouTube video. Can't strongly recommend enough Mark's guide. It is linked in my description below. It is discounted this week only. The next 2 days is your biggest discount. So take advantage of it while you can. It gives you everything you need to know. It definitely gave us all the information that we need to know for our taxes. And like I had mentioned in my Instagram story, my taxes are done. They're done the first week of January. I have officially become Ned Flanders, and it feels so good. Instead of waiting and stressing and dreading, it's just so nice to know exactly what to do. It is completely zero stress for us. So I really, just can't remember. I recommend it enough. And my business, since learning my numbers and learning about taxes and learning about bookkeeping, has grown so much just year over year. My profit most years has doubled. Last year was a bit of an anomaly, but I still had growth. And I just can't even stress the importance of looking at those monthly numbers and knowing what you're taking in, knowing how your business is doing. It's so crucial. It's just crucial. Your gross numbers tell you nothing. That's all I'll just plug. Your gross numbers are nothing. It's all about your net, and it's all about what you're actually doing as growth-wise. Okay. Let's see. I sell on multiple platforms, but I meet the criteria for the platform to report on to the IRS. For example, eBay, you have to sell 20,000, otherwise they don't send you a 1099 again. We talked about that. They might not send you a 1099, but you still owe on that money. So you still have to report it. Every platform, even if it's $1,000 here, $1,000 there, you are obligated to report all of that. Mark, did you see any other questions that you were itching to answer real quick? Maybe we'll do one last one.
Yeah, let me see. Scrolling up.
Yeah, same. I just want to make sure. I'll check my feed really quick.
Well, yeah, while I'm looking, I had a funny thought when you were talking about bookkeeping, about doing it, just taking that time so you can have less anxiety later. But it's funny, most people, they put off bookkeeping because it's sort of painful for them, and they just focus on their normal reselling activities because that's what
Right.
And it's funny because I do the opposite. Like when I have a task or an email that I don't really want to do, I'll be like, I'll just go in and reconcile my books real fast.
So it's your safe place versus
my safe place.
Scary place that we don't want to go. No, it's true. It actually, once you become organized with it, I think I'm in your camp where it feels very peaceful to go in and to check your numbers. And it gets more exciting when you have growth that month. Oh my gosh, I grew an extra $1,000 over last month. It's exciting. It's fun to look at, especially as a mom, I don't get a lot of hard data feedback about how I'm doing. Usually it's Mom, I can't believe you're making me eat this, or, but instead, I can look at my spreadsheet. That's an actual number and a little pat on my back going, hey, you did something right today.
That's all the validation you need.
That's all the validation I need. And it's so helpful. So it used to be my scary place. Now it is my safe space. And I absolutely love checking my numbers every month, keeping them up to date. And it's so fun. Okay. I think we'll go ahead and end it, Mark. We've taken up enough of your time. You guys are so awesome for joining us. We had a lot of people join us for this stream. So really exciting. You guys are the best. Any additional questions, leave them in the comments below, and I will try to respond as best I can. But again, the best thing you could do really is get Mark's tax guide and have full peace of mind. Mark, any parting last words for all of us?
Yeah, just don't stress. I talk to people a lot, and they always say, "Oh, it's I think maybe I was overthinking it. It doesn't seem like it's as bad as I thought." And usually, it's not. It's just a matter of sort of learning the basics, kind of getting your ducks in a row, and yeah, it's not that bad. Every year it gets easier. It really does. Every time you do it, it gets easier, and it gets better, and then it becomes a fun, happy place to be. So. All right. Thanks, you guys. Thanks, Mark. You guys are the best. And yeah, I'll see you next time. See you later.